Welcome back to Roxham TV. I'm your host, Jamie. A lot to cover today and about some major developments across global markets, technology, and also the crypto world. First, we'll start with energy markets. Oil prices have been extremely volatile after tensions in the Middle East pushed crude close to $120 per barrel earlier this week. Now, the US is taking a very unusual step, which is to temporarily allow the purchase of Russian oil already stranded at sea in order to stabilize global supply. We'll break down what this means for energy markets, inflation, and why investors should be paying very close attention to. Next, we'll look at a very bold prediction from Elon Musk. During a recent interview, Elon Musk said that if there's no World War III, the global economy could grow 10 times in the next decade, driven by artificial intelligence and also humanoid robots. We'll unpack what he means by AI entering a phase of self improvement and why he believes robots like Tesla's Optimus could massively change productivity and the future of work. Then we'll turn to a quieter risk building inside the financial system, which is private credit funds. Facing rising redemption pressure, some of the largest funds linked to major institutions are now limiting withdrawals as investors rush to pull money out. We'll explain why this matters for global liquidity and how stress in private credit could eventually ripple into risk assets like BTC, like Bitcoin. After that, we'll dive into a growing Bitcoin policy fight in Washington. A public dispute has erupted over whether Coinbase supported or opposed a tax redemption for exception for small Bitcoin payments. Coinbase strongly denies the claims, but the debate highlights a bigger divide between Bitcoin payments and also stablecoin focused regulation. We'll also look at new regulation coming from Paraguay, where authorities are expanding crypto reporting rules and requiring users to disclose wallet addresses and transaction details once activity passes $5,000 per year. And Another sign governments are trying to map global activity to real world identities. And finally, a crypto security warning. The website of Solana meme coin launch platform called Bonk.fun was reportedly hijacked by hackers. And some users who interacted with the site had funds drained from their wallet. We'll break down exactly how the attack worked and what it tells us about the rising sophistication of crypto scams. So we have a lot to go through today: energy markets, AI, financial risk, Bitcoin policy, of course, like crypto security. So without further ado, let's get started with the first news of today. So of course, we have to provide a quick update on the geopolitics tension and also on the oil markets, because oil markets are under pressure again. Price surged over $120 per barrel earlier this week as tensions in the Middle East disrupted global energy supply. Now the US is taking a very unusual step. Washington is temporarily allowing the purchase of Russian oil that is already stranded at sea. So the goal is pretty simple, which is to stabilize global energy market. So the policy was later confirmed by US Treasury Secretary, so Scott Bessent. He said the move is a short-term and narrowly targeted measure. It only applies to Russian oil that was already loaded onto ships before the new deadline. That means new shipments are still restricted, but the oil that is already moving across the oceans can now be purchased temporarily. Right now, there are about 124 million barrels of Russian oil sitting on tankers around the world. These shipments are spread across about 30 locations globally. Just to put that into perspective, that amount of oil represents roughly 5 to 6 days of global supply. allowing that oil to enter the market could help ease immediate shortages. But like energy markets have been so volatile since Iran conflict escalated. Oil prices jumped sharply earlier this week after threats to close the Strait of Hormuz. Like this is a very narrow waterway. Like of course, this is one of the most important energy routes around the whole world. Nearly one third of global seaborne oil supply passed through this really narrow waterway, and any disruption there can quickly send oil prices surging again. Right now, the global benchmark is, of course, like Brent oil is trading at $101 per barrel. And the US also issued a 30-day waiver allowing certain countries to purchase Russia crude oil, and that include India. Officials say the reason is quite practical. Those oil shipments are already on the water, and Indian refineries can process them quickly. The Treasury says this decision will not significantly benefit the Russian government financially. That's because most Russian energy revenue comes from taxes charged when oil is extracted, not when it is sold later. Importantly, the broader sanctions on Russian oil remain in place. So the G7 and the EU still enforce a price cap on Russian oil exports. And that cap currently sits around $44 per barrel. And the EU plans to fully phase out Russian oil imports by 2027. So this new measure is temporary and very limited. And this move also shows how fragile the global energy system is right now. When supply disruptions hit, even temporarily, governments may step in to prevent price spikes. For investors, rising oil prices that could affect inflation or interest rates and global growth and risk assets like stocks and Bitcoin included, of course, energy shocks often ripple through the entire financial system. So, whoever replaced Jerome Powell, there is a very low probability that Kevin Walsh gonna lower rates because, like, simply the situation doesn't allow him to do so. So, for the bigger picture, for now, the US says this is just a short-term solution to calm the market, but the bigger question remains. If geopolitical tensions continue to rise, how stable can global energy supply really be? Because when oil moves sharply like this, the effects rarely stay inside the energy market. They tend to spread across the entire global economy. So, of course, when we have more updates on Roxham TV, we will let the viewers know. But moving on to next piece of news, I kind of want to shift gear to AI a little bit. And there is a very bold prediction coming from Elon Musk himself. So during a recent interview at the Abundance Summit, Elon Musk made one of his boldest economic forecasts just yet. So he said that if World War III does not happen, the global economy could grow 10 times bigger within the next 10 years. So not 10%, not double, but 10 times larger. According to Elon Musk, the reason is quite simple. So artificial intelligence and robots are about to massively increase global productivity. So let's go through what he said during the interview. So Elon Musk said, AI is already entering a stage where it helps build the next version of itself. In simple words, that means old AI models are helping train new AI models. Humans are still involved, but getting less and less. Elon Musk said fully automated self-improving AI could arrive by the end of this year or next year at the latest. He even said we are already in a kind of hard takeoff right now. So his point is this: AI progress is moving so fast that breakthroughs are happening almost every single day. So next point he point out is, of course, like Optimus 3. So he gave a major update on Tesla's humanoid robot. So Optimus 3, he said it is close to being finished, and he believes it could be the most advanced robot in the world right now. Tesla's plan right now is to start production in the summer, keep output low at first, but then ramp up fast next year. Elon Musk says robot production will follow the normal factory patterns. That means slow in the beginning, then fast growth later. He also said Tesla is designing a new factory just for robots, and future robot models may be updated every single year. So, question people are asking, why is Elon Musk so bullish? Well, simply because he believes AI and robots will massively increase output. So that means more goods, more services, and more efficiency. He said the world could enter a period where machines produce so much that the economy becomes far bigger than today. His base case is this: if there is no major war, a 10x increase in GDP in just 10 years is actually a fairly conservative forecast. So that is a huge statement, of course, coming from Elon Musk. But he also gave a very direct warning. He said in the future, humans could become a very small part of total intelligence, not just on Earth, but eventually in the whole solar system. So that sounds really extreme, but his message is clear. AI may become so much faster or smarter than humans that we can no longer be the main force driving intelligence. In other words, humans may not disappear, but we may become less central. This is a very different feature from today's world. Now, here's where it gets very interesting during the interview as well. Elon Musk says Tesla does not plan to cut workers. In fact, he says Tesla may hire more people, but he expects output per person to become extremely high. So his view is not simply like robots replacing everybody, all the humans on Earth. His point is more like humans plus AI plus robots equal to far more productivity. That means each worker could produce much more than before. But here comes the wildest part during that interview. Elon Musk said that after AI singularity, money itself may not become as important as it is today. The reason why is because if AI and robots produce huge amounts of goods and services, society could enter a deflationary world. So that means supply grows so much faster than money. If products become abundant enough, prices could eventually fall. Elon Musk even said we may eventually live in a world where money is not that important anymore. He believes governments may first move towards something like universal income, simply giving people money as output explodes. But in the longer run, he thinks AI may care less about human money and care more about energy and physical resources. For investors, this matters because Elon Musk is making a case for a very different long-term world. If he is right, AI is not just another tech trend. It becomes the main engine of economic growth that could benefit AI companies, robotic companies, energy infrastructure, chip makers, and data centers. But it also raises big questions. If machines do more work, where does income go? How do governments respond? And what happens to human value in an AI-heavy economy? So the bottom line of this interview, like Elon Musk is betting on an AI feature that is much bigger, much faster, and much stranger than most people expect. His forecast is simple. If there's no world war, then the global economy could grow 10 times in 10 years. But the trade-off may be just as big. Humans may no longer sit at the center of intelligence. That is the promise, and also that happened to be the warning of AI. All right, so we will take a short break from here. And when we come back, we are diving to some financial issues that is floating in the crypto world right now. So that being private credit is facing some huge redemption pressure. So do stay with us after the break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxum TV, and thanks for sticking around with us after the break. We're now diving into a silent storm that is happening in finance right now. While the world is watching the war in the Middle East, another risk is quietly building in the financial system, and this time the pressure is coming from private credit market. And if this spreads, it could affect banks, global markets, and even Bitcoin. So let's see if Michael Barry was right after all. So let's break it down. So what's happening right now is that in March 2026, large private credit funds in the US suddenly started facing heavy redemption requests. Investors want their money back, but many of those funds cannot give it back quickly. For example, a major fund managed by BlackRock called H-Land received redemption requests of 9.3% of the fund, but the fund only allows 5% withdrawals per quarter. So investors asked to withdraw about $1.2 billion, but only about $620 million was approved. That means nearly half the requests were rejected. And this is not just one fund. Funds connected to Blackstone or Morgan Stanley or Blue Owl, they are all seeing similar pressure. So the problem is something called liquidity mismatch. These funds promise investors they can withdraw money every quarter, but the assets inside the fund are long-term corporate loans. Those loans can last for years and cannot be sold quickly. So when many investors ask for the money back at the same time, the system gets stressed. It creates what analysts call a liquidity illusion. Like everything looks very liquid at first until investors try to exit. So you may ask, what triggered this wave? Well, there are a few reasons. First of all is AI. So AI is really disruptive. Many private credit loans were given to software companies, but artificial intelligence is now changing the software industry very fast. So business models may not survive. That makes lenders very nervous. Second of all is rising defaults. Loan default rates reached about 9.2% last year, according to Fitch. That's really high. Third is retail investors are pooling money first. Many of those funds attracted wealthy individuals over the past few years. Now, with uncertainty rising, they are rushing to exit. And this is starting to look very concerning because private credit has grown into a massive market right now. Today, it's worth around $3 trillion globally. Some estimates say it could reach $5 trillion in the next few years. Many analysts call it a shadow banking system. If redemption keep rising, funds may be forced to sell loans quickly or cut valuations or reduce leverage, and that could pressure the broader credit market. In fact, after the news, shares of large asset managers dropped sharply. Some analysts say this could be an early warning sign, similar to what happened before the 2008 financial crisis. So let's see if Michael Berry is right once again. Not the same situation though, but the first cracks are appearing. So why does this matter to you, especially you as a Bitcoin investor? Well, the direct impact on crypto might not be that significant, but there are two important channels. So first is the risk sentiment. If private credit stress, the whole stress spreads, investors usually reduce risk across all markets. And historically speaking, Bitcoin often gets sold first because it is liquid. We saw this in March 2020 when Bitcoin dropped sharply during the global liquidity crisis. Another risk comes from something new, which is RWA, because a lot of these companies are moving on-chain. Right now, about $5 billion in private credit loans are tokenized on-chain. If the underlying loans lose value or default, it could trigger volatility in DeFi markets. That means traditional finance stress could start leaking into crypto ecosystem. But here's an interesting part. Some analysts believe private credit stress could effectively benefit Bitcoin because history shows a pattern. In the first phase of a crisis, sure, investors sell everything, but in the second phase, governments respond with liquidity injections. And when liquidity returns, Bitcoin often reacts faster than other assets. So the key question now is quite simple. Is this just a temporary redemption wave, or the first real stress test for the private credit boom. Over the next 3 to 6 months, we'll see more data as funds release their quarterly report. Market, of course, will be watching very closely because when liquidity disappears, we discover which parts of the financial system were truly strong and which ones are not so much. All right, so let's move on to some more drama from the crypto world. So there's a new fight just broke out in Bitcoin policy circles, and this one is very personal. The issue right now is like whether Coinbase has been quietly working against a tax break that many Bitcoin supporters believe is badly needed. Coinbase says the claim is completely false, but others are not backing down. So let's break it down. Let's drama what exactly happened. So the policy at the center of the debate is called a de minimis tax exception. In simple words, it would remove capital gains tax on small Bitcoin transactions. Right now in the US, Bitcoin is treated as property. That means even if you use Bitcoin to buy something small like coffee, like food or ticket, it can create a taxable event. So users have to track when they bought the Bitcoin, what price they bought it at, and what price they spent it at. That makes everyday Bitcoin payments very, very hard. But there is a proposed fix now, and that is a $300 exemption per transaction with a $5,000 annual cap. That means small Bitcoin payments would no longer trigger tax headaches. Supporters say this would remove a major barrier to using Bitcoin as actual money. But now Coinbase is in the picture. The dispute exploded on X after podcasts and media outlets, so TFTC accused Coinbase of lobbying against this Bitcoin tax exception. They claimed Coinbase was supporting stablecoin-focused regulation while not supporting the same kind of relief for Bitcoin. And this is some very serious accusation because many in the Bitcoin community believe this issue goes to the heart of what Bitcoin is supposed to be, which is peer-to-peer money. So Coinbase CEO Brian Armstrong responded directly. He said the accusation is totally false. He said he has personally spent a lot of time lobbying for Bitcoins, the de minimis tax exception, and will continue doing so. Marty Bent replies his claim was not necessary about Brian Armstrong himself personally. He said his sources told him it was Coinbase team or lobbyists who were working against it. So now we have a very direct public clash. Coinbase leadership says absolutely not, while Ben said his sources say otherwise. And right now, there's no clear resolution. Then the story got even bigger. Jack Dorsey was involved, which is the co-founder of Block, publicly asked Brian Armstrong for clarification. So he posted, hope this is true for de minimis as well. So Brian Armstrong replied that yes. So that reply matters a lot because now Coinbase support for the Bitcoin tax exception is being stated clearly and publicly by the CEO himself. This is where the deeper policy divide starts to show. Some policy voices in Washington are warning that lawmakers may be considering a stablecoin-only version of the exception that would mean tax relief for digital dollars, but not for BTC. And that would be a major shift because it suggests Washington may be more comfortable with stablecoin payments than with Bitcoin being used as everyday money. So this is bigger than just one argument on X. This fight actually shows a growing divide in crypto policy. One side wants stablecoins to become the main digital payment rail. The other side wants Bitcoin to remain a true peer-to-peer payment system. If Bitcoin does not get small transaction tax relief, it stays harder to use in daily life. And if stablecoins get special treatment first, that could shape the next phase of crypto adoption in the US. So the real question we're asking here, what kind of crypto system does Washington want? Like one built around Bitcoin as money or one built around stablecoin inside a more controlled financial framework? For now, Coinbase says it supports the Bitcoin exemption. Ben says his sources still say otherwise. The facts are still being fought over, but one thing is clear, that the Bitcoin tax battle is no longer quiet. It is now fully public. So we'll take a short break from here, and when we come back, we are diving into more countries that is tightening its grip on crypto. So do stay with us.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, The Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxanne TV, and thanks for sticking around with us. Just before we hit the break, we were talking about country that is tightening control around crypto, for example, the US. So there's another country that is also doing the same in joining the list, and this time is Paraguay. The country's tax authority just introduced a new rule that will force crypto users to report detailed information about their transactions, and the threshold is not very high. If you transact more than $5,000 worth of crypto in a year, you now have to disclose your activity to the government. So the rule was issued by Paraguay's National Tax Authority called the DNIT. So under resolution number 47 2026, crypto users must report a lot about more than just like profits. They still need to provide their wallet addresses, transaction hashes, counterparties involved in the transaction, the type of digital asset used, and the dollar value of each operation. All of this information will be submitted through Paraguay's online tax platform. That system will essentially connect blockchain activity directly to a taxpayer's identity. So the rule applies to almost every type of crypto activity. So that would include buying or selling crypto, of course, transferring crypto between wallets, swapping, mining rewards, payments using crypto, or even donations made in digital assets. So this is not just about trading. Nearly all blockchain activity above the $5,000 threshold must now be tracked. Officials say the goal is simple. They want to improve tax compliance and follow international anti-money laundering standards. But this rule also reflects something bigger. Around the world, governments are increasingly trying to link blockchain transactions to real identities. That means turning the transparency of blockchains into a tool for monitoring financial activity. Supporters say rules like this help prevent tax evasion and illegal activity, but critics say they raise serious concerns about financial privacy because once governments connect wallet addresses to real people, they can potentially track every transaction on the public blockchain. That changes how many early crypto users viewed the technology. So instead of private digital money, it becomes something much easier for governments to monitor. And Paraguay, of course, is not alone. Just now, we were talking about the US before we hit on the break. Similar reporting rules are appearing across the US and EU, of course, and many parts of Asia. as crypto becomes more mainstream, regulators want the same level of oversight they have in the traditional banking system. So the real question going forward is this: can crypto remain permissionless and decentralized while governments push for full transparency and control? That tension will likely shape the next phase of global crypto regulation. So, another security concern coming out from the crypto world is a platform called Bonk.fun. I'm sure a lot of viewers on Jam Crypto actually quite familiar with that name. So this time it involves the Solana meme coin ecosystem. If the official website of Bonk.fun was reportedly hijacked by hackers, and some users who interacted with the website say the crypto funds disappear from their wallet. So let's break it down what happened. So according to the team, hackers managed to take control of the bonk.fun domain. They then injected malicious code into the website, and this code installed what is known as a crypto drainer, which is a type of software designed to steal funds from users' wallets. The team immediately warned users on X, so do not interact with the website until they have secured every single thing. So the attack targets users through a popular trick. So hackers created a fake terms of service signature request. If users clicked and signed that transaction in the wallet, the malicious contract could gain permission to move the tokens. Once that approval is given, attackers can drain the wallet. That means the loss did not happen just by visiting the website. Users had to approve a transaction for the exploit to work. The project team said they quickly noticed something was wrong. So Tom, who's a member of the Bonk team, said the attack was detected early and the total losses appear to be quite small. According to him, only users who signed the fake agreement on the website were affected. The team said they are working urgently to fix the security issue and restore the site safely. But this attack highlights a bigger issue across the crypto industry. Phishing and wallet draining scams are becoming more common and very sophisticated. Hackers can now use techniques like domain hijacking or fake website or identity impersonation. So just to trick users into signing malicious transactions. Security firms say artificial intelligence is also making scams very hard to detect. Hackers can now generate realistic websites, messages, and fake identities so much faster. According to blockchain analytics from Chainalysis, global crypto scams reach about $17 billion in losses in 2025. So that shows just how large and organized those operations have become. So the key lesson here is like in crypto, signing a transaction can give powerful permissions to a smart contract. So always make sure to double check what you're signing, what permissions you're granting, and whether the website is legit. Because once a wallet approves a malicious contract, funds can disappear in seconds. As the crypto industry grows, so does the scale of attacks. So we have new tools, new tokens, new platforms create more opportunities, but also more risk. And incidents like this, what it shows is that security remains one of the biggest challenges for the entire crypto ecosystem. For now, the Bonk team says the situation is under control, but for users across the space, this is also a reminder that in crypto, one wrong button can cost you every single thing. All right, so that's pretty much all the news I want to go over in today's show. So before we go, make sure to give us a follow on Twitter. So My Twitter is jamjamcrypto_IO. Make sure to follow Roxham TV because we have very valuable content coming out on a hourly basis, not just about Bitcoin, but also about geopolitics, about global news, about AI. So point being, there's so much value to be to extract on Roxham TV. So make sure to give us a follow and stay tuned to more news. So as for my show is Monday through Friday, 3 a.m. Eastern Time. We still have more shows lined up here on Roxham TV by our other amazing guests. And the next show will be hosted by our producer of Roxham TV Hong Kong. So make sure to stay tuned. As for you guys, I'll see you guys next weekend. Happy weekend.